You should just do one podcast that's just on crypto sex culture. That would be fucking amazing.
I don't know if there is much crypto sex culture. I'm not sure if crypto fans have much sex.
John McAfee fucked a whale.
That's true, yeah. John McAfee did fuck a
like
whale.
All the wheel, you've got like a sex dungeon woman, you've got fucking a whale, you've just got like every possible weird sex thing connected with crypto somehow.
Porn trying to figure out a way to incorporate crypto and never
Yeah.
seeming to really work.
Yeah.
You're right.
This is material for an entire podcast.
Yeah, we've got the
crypto
ass
sex
eating
culture.
fiasco.
What?
Yeah. There was the legend there was a legend that I think it was, who was it? What was the porn star? Brenna Sparks. Like somebody had to eat her asshole in order to bring on the next altcoin bull market.
Yeah.
Dude, there's room for a whole podcast on this.
And he actually
It'll be the crypto sex
Europe.
podcast.
He flew from Europe to Las Vegas to do it.
He flew out to fulfill the prophecy, is what it was.
Yeah. Which was hysterical.
This is crypto. This is fun. So when Michael says, "Oh, the Bitcoin maximalists are going to hate your article because of this reason," Noah, your first response is, "But I'm not against Bitcoin." Yeah, it doesn't matter. This culture is so weird that everybody is trying to hate each other because they want to just be. They just want. I don't know what the hell they want.
Like, if you make one
do we want to say that on air?
Because
we can start the podcast now.
Oh, we've already started.
We've already started.
Yeah.
Oh, this is it. All right, great.
Yeah. No, I mean, like, because if your explanation has anything wrong with it that could potentially convince people not to buy crypto, they're gonna attack you. And it's just the way they are. And it's just like, wow, you even admit that you own some, and you're trying to give constructive criticism and feedback from somebody who works in the economics space in the sense of like discussing it on a daily basis, and they still think they know more than you. Did you guys listen to?
I think it's even more primitive than that. It's more like, if you say anything that goes against my religious belief, then my religious belief in Bitcoin, then you need to be shut down. I mean, it's not like these Bitcoin maxis. I don't even think they really want adoption. I think they just want to be right or something. They just want a war anyway.
Or maybe they just want their portfolios to go up. Maybe they have zero interest in Bitcoin becoming a currency, and all they want is for it to become like this investable asset that periodically gets pumped up to ever higher heights by a new wave of speculators.
Pretty much, because they did want it to. Oh, go ahead.
I was just going to say, we should at least say what the name of the show is. You're listening to Keyword Crypto with Michael and JJ. Today we have Noah Smith back on the air. Just published an article in Bloomberg talking about how, well, Noah, do you want to tell us what it's about?
Yeah, so it's about the question of how could crypto go from being this investable asset, which it currently is, to being the currency. You know, how could we go from talking about prices of cryptos in dollars to talking about prices of crypto in Bitcoin, you know, as our natural measuring stick? Like, how could we get people to start buying pizza and, you know, massages with crypto all the time instead of just like a few people who do it for fun? So how does that work? Like, how can that happen? And that was what my article was about.
Which is what we've been kind of talking about on the show since the beginning, and both the times you were on it before, we talked about this exact thing. But it's nice that you kind of put it out there for the rest of the world, since we only have like a few listeners.
Yeah. And so Bitcoin, the built into the incentive to buy Bitcoin is that it's going to go up in value because there's a limited supply. Yeah. Kind of like the idea of gold, right? There's only so much of it. And so, yeah, go ahead.
No, that was part of the original idea. Like, the idea that the people who made Bitcoin were, you know, interested in creating digital gold, because there was this idea, and still is this idea, that gold is inherently money, and that gold is the one true money, and that, you know, sort of the US dollar and all fiat currencies are false money that will eventually fall. But yet, instead of gold bugism, perhaps we could use new technology to create a form of digital gold that will be the new one true money when fiat currencies eventually die.
You want to know what's hysterical about that? It just reminds me of the BTC, BCH, BSV fight of
Those are all the Bitcoin
your
forks,
fork is a scam. Like, oh, your USD fiat fork is a scam. This is the real money. Gold is the real money.
Yeah,
USD is a scam because that's what they
There
say.
you
They
go.
say USD is a scam. All
Yeah.
fiat's a scam, and it's just like we need more.
Well, so
We need more words in this space.
so the one perhaps the main point of your article is that cryptocurrency needs some inflation in order to get people to spend it. Otherwise, you just want to hoard your Bitcoin. You're just going to hold it forever.
Right.
So
That's
this
right.
and having limited supply is usually an argument that people make for owning Bitcoin because it's going to go up in value. But that means it's not going to be a money. That means it's going to be a store of value. Okay, that argument's been made, I don't know, 100,000 times. But I was wondering if you could tell us a bit about how the U.S. dollar works. What is the inflation model of the U.S. dollar, and how is it sort of? I mean, how is it controlled?
That's a great
in
question.
the simplest ways.
Right. So the first thing to note is that the inflation isn't totally governed by the supply of U.S. dollars, and a lot of people think it is. Milton Friedman wrote that in the long run, it's mostly controlled by the supply of U.S. dollars, the inflation rate, but that's not necessarily true. Inflation is actually controlled by whether or not stores and other merchants and whatever landlords, what have you, raise their prices. And you don't have to print more money, more dollars for stores to raise their prices, because they can just do it. And in fact, then what just happens is you get the same number of dollars circulating through the economy at a faster rate. And so that's called the velocity of money. So you can have inflation if the velocity of money goes up, even if the actual money supply doesn't go up. So that's the first thing that can change inflation. The second thing is if you have an increase in the money supply from banks. So banks, when banks make loans, when if I'm a bank and you're like a, I don't know, paper company, and then you want to take out a loan, and I say, okay, here, I'm giving you this loan by just creating a checking account. This checking account is in your name. That is money creation, and banks can just do that. Now there's limits on how much they can do that, and the limits are there's the limit of confidence. Like if they do that too much and don't have enough like reserves to cover, people who want to take their money out, you can have runs on banks and blah, blah, blah. We try to prevent that in the United States because that leads to economic problems. So usually the limit on how much money banks can create via lending is statutory. It's regulatory. The government says don't make too many loans relative to the amount of reserves that you have. Relative to the amount of deposits and other sort of like safe assets like that you have. And so there's a bunch of regulations. There's capital regulations, capital adequacy kind of things. There's the reserve requirement ratio, et cetera. And so there's all these limits on like how much loans banks can actually make, and therefore how much money they can create. Now then, finally, the final thing that affects how many US dollars there are is the Fed. And this is the one, weirdly, that everybody knows about, and that a lot of people think drives the whole thing. The Fed can create money by creating reserve accounts at banks. So or actually the other way around, what happens is the Fed has reserve accounts that banks can draw on, and the Fed creates those reserve accounts, just like a bank creates a checking account and gives it to someone they lend money to. The Fed creates sort of a checking account kind of thing and gives it to banks, and those are called reserves. And when the Fed doesn't actually print any money at all it does is this: it creates these reserves and it gives the money to banks. So the Fed doesn't go around dropping money out of a helicopter, like dollar bills out of a helicopter. It doesn't even print any dollar bills. It just it essentially creates these reserve accounts that banks can use. So the way we normally think of this process is the Fed moves first. We think the Fed creates reserves for banks. That means that banks are allowed to give more loans. Banks create sort of checking accounts for the people they lend to. That increases the money supply. So Fed increases monetary base, banks increase money supply, and then the loans get the money that they lend out through creating these checking accounts, then get spent more, pumping up the velocity of money, or not even pumping up the velocity of money, just pumping up the number of dollars that get spent, which pumps up prices. So it's this long chain of things that happens. So when you say the Fed prints money, it's not really true. The Fed creates reserve accounts, which hopefully stimulate bank lending, or might stimulate bank lending, which means which might make prices go up. So there's this whole chain.
Wow. Okay, so I think in like the circles that we run in, the people that listen to this podcast, many of them probably understand that, okay, the Fed doesn't just print money, the government doesn't just print money, but I think people probably don't realize how complex this system is. And maybe those of us who know that the way more money comes into the system is based on debt and the banks creating money, it's really not something that's talked about very much in the world of crypto. I mean, maybe in economics, it's a given, but okay, so everything is basically based on debt. Is that right?
Right.
I mean,
everything is
reserve
based on
accounts, reserve accounts, and banks loaning money. So what are, I guess my question, and I don't have an answer to this, and I don't think any of us will, is what in the land of crypto is creating that same model, if that's necessary, in order to create a system that would make it more like the USD? Or what if we had, I know that there are cryptocurrencies that are based around lending and debt models. So there are probably systems like that, but it would be an interesting thing to look at maybe for a future episode.
Right. Well, here's the weird thing. We use debt as money. So when basically one person A makes a loan to person B, and then person C uses person A's loan to B to pay person D for things. That's weird, right? But that's how it works. We don't use
kind of weird. Yeah.
Yeah. But you don't have to do that. You can have commodity money.
Isn't that why we switched over to a single form of fiat? Is because we used to have too many forms of different debt back like in the 1800s, and people could just kind of create their own currency, and then it was just like worthless. Okay.
It's kind of like there's so many cryptos right now.
Right.
We've got a million different cryptos. Everyone can create their own crypto.
This is what the 19th century was like.
So we're like basically living in the 19th century of crypto.
So banks were creating their own cryptos.
So I guess the main question that I have is, how logical is it to assume that a rich person, let's just say I have 10,000 Bitcoin, and I want to give a loan to somebody. Why on earth would I loan them 2,000 Bitcoin versus like giving them an IOU, like some kind of IOU that they could then in turn use to pay for something, so I don't have to give away my actual Bitcoin?
You just reinvented fractional reserve banking. That's exactly how it works.
Yes, right. It just because I don't understand about people in Bitcoin and maximalists is they don't seem to understand rich people, and they don't understand history, and they don't understand what rich people do to keep their wealth, and like you don't like it's so you when you were on here last time we talked about hard money and soft money, right? Bad money and good money.
Yeah. Bad money, good money.
Yeah, and so like you want to use bad money and keep good money, right? In essence, because you want to get rid of the bad money, you want to keep the good money. And so
exactly right.
The same thing is going to happen with Bitcoin. If Bitcoin becomes the reserve currency and that becomes money, and that's hard to get, people are going to create some kind of bad money to use so they can keep their good money, which is Bitcoin.
Right. They're going to use
Bitcoin and you know what? Right. And you know what's interesting? You could have there was a time when people actually went around carrying gold coins as money, right? Yeah. But what happened was that banks held the gold coins in their vaults and said, instead, we're going to give you this IOU that can be redeemed for this many gold coins.
Yeah.
And at first, they'd only issue IOUs equal to the total amount of gold they had, so that if every single person went and asked for all their gold back, on the same day, they could all get it, right? But then banks invented fractional reserve banking, which is to say, suppose I have like 1,000 ducats of gold in my bank, in my vault, then I make 10,000 ducats worth of loans, right? And so now you've got these pieces of paper running around officially worth 10,000 ducats, although I only have 1,000 ducats in my vault. And if you come back and if you want your ducats back, if more than 10% of the people come back and all want their ducats back at the same time, I'm fucked. The bank goes under. That's the end of that bank. And then everyone realizes that they're not getting their ducats back, and there's, fires and cities burn and all that stuff. Or like Mary Poppins, it's like, remember Mary Poppins when they can't get their money out and they like store, or It's a Wonderful Life has a bank run too.
Well, so it's a relatively fragile system that we've been sitting on.
It's a fragile system.
We fixed it with FDIC insurance. They said, look, we're gonna.
But that's a patch.
The government says, no, but the government says we're gonna guarantee this money just because the bank doesn't have it. The bank doesn't need to have it. We'll guarantee it for you.
And if
the strongest military in the world will guarantee it for you.
Right. Now you can absolutely, with crypto, replicate the fractional reserve free banking system of like the 19th century.
Yeah, hear that, Maxis?
Yeah, so you can absolutely do that. So if I want to make like Noah Bank, right? And suppose I buy like 1,000 Bitcoin, and then like I want to lend 10,000 Bitcoin to people. Instead, what I do is I issue these IOUs to people, saying like this IOU is worth however many Bitcoin, and it all adds up to 10,000 Bitcoin, and then I do that with my own cryptocurrency, Noah Coin, that I create. And I say, you can exchange Noah Coin at the ratio of 1-to-1 with Bitcoin for this Bitcoin that's in my vault, in my wallet, whatever, right? Yeah. And then I have 1,000 Bitcoin in my wallet. There's 10,000 Bitcoin worth of Noah Coin floating around out there. And then people can start trading using Noah Coin. And as long as more than 10% of people don't all ask for their Bitcoin back from my wallet on the same day, Noah Coin becomes the currency of the land, and its value is pegged at 1-to-1 Bitcoin. And I've just effectively turned Bitcoin into Noah Coin at a ratio of 1-to-10. And I have actually increased the money supply tenfold, of that 1,000 Bitcoin that I have. And if all Bitcoin gets put in vaults and all gets multiplied at a 10 times ratio, we've just increased the effective Bitcoin supply 10x. And nothing in Bitcoin's code can stop us from doing this.
Yeah.
Crazy.
So, nothing. And I think that's the problem with, did either of you listen to Anand Giridharadas today on Twitter? Okay. Thank you. Say it one more time.
Giridharadas.
Okay. Thank you.
Giridharadas. Yes. If we can say Papadopoulos, we can say Giridharadas.
So Anand Giridharadas was did a live stream on Twitter today, and one of the things he discussed was rich people and what was it? Okay, hold on. What was I going to say? Rich people kind of doing what they always do, and it's pretty like nothing really changes. And so like you'll have another rich person says they're going to fix it, and they end up kind of like doing the same exact thing, but in a slightly different way that people can't really see it.
Fixing what? Fixing
economies, fixing, FDR, did something and then he fixed something, but then, rich people figure out a way to keep
around it.
Yeah. Keep being plutes, plutes being plutes.
Plutes.
Plutes being plutes.
Plutes gonna plute. All right.
Yeah. Plutes are going to plute. What are you going to do?
Yes. Welcome to the world. Like it's a game of cat and mouse between society and individuals.
But then he also said that you have these people who, in no other system, he's never come across a teacher who was really good at being a teacher who said, hey, I think I can fix the Federal Reserve because I'm a good teacher. Or I think I can fix the auto industry because I'm a good teacher.
Mm.
Whereas, you get people like Mark Zuckerberg or like Warren Buffett or Microsoft guy. What's his name?
Bill Gates.
Bill Gates, or Bill Gates saying like, "Hey, I'm a billionaire."
that was an amazing moment, by the way. I would just like to say to everybody, someone just forgot Bill Gates' name.
That happens a lot on this podcast.
That's great.
What's that super rich guy who sits in the White House?
Oh,
yeah.
Who cares?
So those guys are like, "Hey, I'm a billionaire because I'm good at writing code, which means I'm good at figuring out how to stop malaria or fix the education system or fix voter registration." It's just like this idea that because they're good at one thing, they also think they're good at everything else and can fix the entire planet is just absurd. And the same thing happens in Bitcoin. You have these people who invented something good or got in early, and because they found that thing, they think they're also good at economics, or they also think they're good at, X, Y, and Z, and they're not. Most of these people don't understand basic economics. They don't understand the history of economics.
Does this have to do with Diridardus?
Oh no, he was just talking. He was just talking about it's surprising where you have these plutocrats come in, like Mike Bloomberg, because he built an empire. Sorry Noah, because you work for Bloomberg, but he built Bloomberg, and so he thinks because he was good at that, then he can also fix the country. And it only really happens with rich people. Like poor people rarely have that kind of egocentrist idea.
Well, I think poor people have this all the time, and just no one listens to them.
I think they do too. Or they're too busy trying to, or people are trying to accomplish one thing at a time. Like, let me get success in my life the way I think of it, and then I'll try to succeed at something else. I think it makes sense for somebody who's built an empire of money to actually think, oh, okay, now I'll try to become president of the United States. I think it's totally egotistical, but it makes sense. Yeah. And then
it does make sense.
In Bitcoin, it's like, okay, I invested early and now I'm a multi-millionaire for buying Bitcoin. Now, why don't I become a thought leader? It's like,
because even though I've never read any book that wasn't a Bitcoin economics book written by people who have vested interest in seeing Bitcoin become what it is. And it's just like, you guys, just read a history book. This is what plutes do. As soon as they figure out how to create fractional reserve lending in Bitcoin, they're going to do it. Like they're already doing DeFi and Ethereum. So of course they're going to do it with Bitcoin. It's like, it's just a matter of time. Right. And they're going to use Doge, or they're going to use whatever. Like they're going to invent another crypto and say, this is our bad money crypto. Like this is what we're going to, and you already see banks do it. Banks coming out saying we're going to come out with our own crypto. So it's like, of course, it's already happening. I don't understand why Bitcoiners.
Well, we've had cryptos with built-in inflation models for a while. I think I was just looking at some, but I remember that Dogecoin is one of them. They 5 billion new coins every year. Peercoin was one of the originals that had an inflationary model. We've got Grin, and I think Ethereum, you mentioned DeFi. Ethereum also has no cap, so it's built in that they can actually manipulate the supply. We have that. Yeah. Another thing that we've talked about with you on this show, Noah, is about and it was something in your article saying that people don't want to get paid in Bitcoin because it's so volatile. Obviously, you don't want to get your paycheck in Bitcoin and then worry about it losing half of its value overnight. So a stable coin, the USD is a stable currency. Can you give us a really
it's not technically a stable currency.
Okay, well, can you give us an explanation of how the US dollar stays stable, relatively stable, if at all?
Right. So what happens with the US dollar is the following. Suppose inflation gets high, and it did that in the 70s and 80s. Really in the 60s too, but we didn't care as much. But okay, so inflation's high, everyone's pissed off. And the reason they're pissed off is not immediately obvious, because when inflation goes up, actually wage inflation tends to go up too. And in fact, real wages tend to do okay when inflation is high, especially relative to capital. So what you see is that the biggest, the sort of labor's share of value and like economic inequality and blah, 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 those all actually reached a high in the 70s, even as inflation was eating away at people's wages. But that's beside the point. Okay, so suppose you get inflation and it goes up high and people want to make it go down. The Fed raises interest rates. And what that means is that the Fed does this by selling off bonds. When you sell something, its price goes down. When you sell bonds, the price of bonds goes down. When the price of bonds goes down, interest rates go up, and that means interest rates are raised. However, what also happens when you sell bonds, you sell it in exchange for US dollars, and the Fed makes those dollars vanish. In colloquially, what they do is burn money, but they don't really burn any money. What they do is, just like when they create money, they make those reserve accounts appear. They just make the reserve accounts vanish. A keystroke happens and the amount of reserves is less. And the number of long-term, bonds or whatever or T-bills or whatever in the economy is higher. And so what happens is, by selling bonds and quote unquote burning the resultant money, the Fed lowers the monetary base and it lowers the amount of reserve accounts that banks have. This presumably causes banks to cut back their lending. Presumably it makes banks cut back their lending. There's also the fact that, when you raise treasury interest rates, banks can hold their money in treasuries and make money more easily that way instead of lending to companies or, businesses or houses or mortgage lenders, whatever. So it's effectively the same thing. By raising interest rates, you remove money from the system. That lowers inflation, or that's at least the theory.
So if I buy a T-bond from a bank, where does that money actually go? Does the money stay with the bank, or does the money go to the reserve?
Say that again.
My grandfather, when I was a kid, he bought me a T-bond for $500. Where does that $500? Well, he bought it.
So
through
you
the
can
bank.
buy two kinds of bonds. Right. Okay. No, that's right. So there's two kinds of ways you can buy bonds: on the run and off the run. On the run means you buy a bond directly from the Treasury. Here's your newly minted bond. Off the run means it's a bond that somebody else already bought that you're just buying from them. So if you buy a bond from a bank, a T-bond from a bank, the bank bought that from the government, from the Treasury.
Okay.
Right, and then sold it to you. And of course,
Gotcha.
the bank. Yeah, so the bank is acting as an intermediary in that case. It just pockets a little bit of fee for doing this thing. And then, and they're just a conduit, right?
Yeah, okay.
So that happens. And then, does that answer your question?
Yeah, I mean, and you have to, I guess I do relate to hard money people. I remember when my grandfather gave me that bond for $500, and when I was 34, I went to cash it in, and he was like, "Man, that was such a stupid investment," because I got $578 back. And
how much was the original price?
$500.
Right. The interest rate was quite low.
Yeah, and so he was but in his day, we didn't have mass inflation like we do now.
We don't have mass. No, we did. In his day, we absolutely did have mass inflation. It was higher.
So let me rephrase that. We didn't have high yield interest investment opportunities the way they did back then. So in his mind, $500 would be worth. Well, see, I mean, this is the question. And you and I kind of went on this on Twitter one time. What do you mean by inflation? Because $500 when my grandfather was my age could buy a car. Now $500 can't even pay 1 month's rent. So you're saying inflation, there isn't massive inflation, and I question that argument. I question that statement because it's
there's been inflation.
Yeah, but
there just hasn't been if you talk about
drastically over the last 50 years.
Oh, well, there was a period of very high inflation.
Once we got the gold standard officially.
There was a period of very high inflation. Inflation was high in the 60s, it was high in the 70s, it was still high in the early 80s. Then it came down, starting in the early 80s.
In a practical sense, inflation is really obvious. If you just 10 years ago you could buy lunch for $10 and you can't anymore, at least not in the
Yeah.
city. It's like it's obvious that money is
Right.
worth less now.
Right.
So
and
I
inflation
guess
happens at like 2% a year, which means that if 2% a year, that's the Fed's inflation target, and the Fed manipulates interest rates to keep inflation at about that target. And actually, for the last couple decades, or a few decades, actually, like 3 decades, we've actually done a good job of keeping inflation around 2%. Now, 2% is low for 1 year. Like, you wouldn't notice much of a change if prices went up by 2%, right? You're not going to notice that change much in a single year. But over, say, 35 years, that means the purchasing power of your money is cut in half. So even 2% inflation, which we think of as low, at a steady rate of inflation, erodes the purchasing power of the dollar steadily.
So I guess and I feel comfortable saying this to you because we're friends. I feel like this is where
Preface.
why the masses have no respect for people in economics, because economists are like showing the graphs and showing the charts and saying, see, inflation wasn't that bad, see, blah blah. But the people on the ground, the people who are dealing day to day with survival month to month, they're like, whoa. 3 years ago, I could buy a Happy Meal for $2.99. Now that Happy Meal is $6.99. What do you mean inflation hasn't? 3 years ago, my healthcare insurance was $100 a month. Now it's $1,000 a month. 3 years ago, my rent was $500 for a room. Now I'm paying $1,400 for a room. What do you mean inflation isn't going up? Like this disconnect. But then, they talk about that, and then economists are like, oh, you don't understand how economics works. And they're like, yeah, I'm living economics. I don't know. Like, you can talk about the theoretical behind it, but this is the real world experience that most people are dealing with day to day. Like, I don't want to see a chart that tells me inflation isn't going up at a rapid clip when I'm making the same amount of money I did 3 years ago, and now I have, 1/4 of the buying power.
So
that I had
the question
3 years
is,
ago.
the question is what actually is inflation? Maybe we can
So I
answer
think
that.
like that's the confusion, is like you're coming
Well,
at
hold
it,
on.
you're explaining it from like, a technical aspect, but the rest of us are like, what, then what is it? That if it's not inflation, then what is it?
Understood. All right. So what it is called stagnant incomes, or even falling real incomes. So in the 1960s, America grew at a rapid rate. And if you were alive in the 1950s, and then if you were alive in like 1970, you could absolutely tell the difference. You were so much, like most people were just so much better off in 1970 than they had been in like 1955 or something, because of, solid rapid growth. But during that whole time, we had inflation that was higher than it is now. And the price of, Happy Meals or whatnot, or houses or cars or whatever, actually was going up at a considerably faster rate then than it is now. And then let's just look it up and see what the rate was back then. Oh yeah, no, that's
So in the 60s, people's
Yeah.
money was becoming worth less faster, is what you're saying.
Yes, that's right.
Okay.
But because
Than it
incomes are
has
going
in
up
the last,
even
like, 10
faster.
years.
Yeah, because incomes are going up even faster, that people
But
didn't, people didn't worry about it.
I see. So the what you're saying is that inflation is not as extreme now. The problem is that people's wages, the income, is not following that inflation.
That's right.
So
That's
that's-
exactly right.
But I thought you said recently that we're
That's not how a market
seeing
works.
real world wage growth, and that's keeping up with inflation. I thought you tweeted. I thought when we were going back and forth last week that you mentioned that you said that on Twitter.
I know.
So
that
we are
there's
right now in like the last, 5 years, or really since 2012, we actually have been seeing wage growth that's been keeping up with inflation, and we've been seeing stronger wage growth for people at the bottom of the wage distribution. So like, Walmart workers or whatever are getting actually bigger raises than like, I don't know, investment bankers or something, whoever's at the top.
Yeah.
I don't know that specifically, but people at the top of the wage distribution. So So that's been going on but that's only a short-term trend, and it would have to go on that way for like decades and decades to reverse the trends of the last 40 years or whatever. So
But then how
it's
does
a recent
healthcare
thing,
how does healthcare and rent not get lumped in with inflation? Because it sounds like you're not
It does.
including.
It does.
Yeah,
It
but
absolutely does.
then why is nobody have? It seems like nobody has any money, and everyone's spending all their money on healthcare and rent right now.
Right. Well, so
I mean,
with
the average
healthcare-
person in LA spends more than 50% of their income on rent. That means that it's obviously not going up with inflation.
Right. But so there. Let's deal with healthcare and rent separately here.
Yeah.
Healthcare prices have gone up hugely, and what's happened is two things.
I think the word is bigly. Bigly.
Bigly.
Is
Absolutely
what we use here.
big league.
Big league.
Yeah. No, it's absolutely gone up massively, and two things have happened as a result of that. Number one, employer side contributions for healthcare skyrocketed, meaning that wages stagnated because instead of paying people cash, employers were diverting all this money to paying that monthly healthcare premium. And so cash wages stagnated even as the amount of money that companies were paying for these employer side health insurance contributions went up and up and up. So people are getting this extra quote unquote compensation in terms of just more expensive healthcare. So that's the first part. The second part is copays and deductibles, the things that Bernie Sanders rails about all the time.
Those are more complicated problems, that and rent, really.
Right. Now that has gone up too. Copays and deductibles have gone up too, but most of the increase has been absorbed by employers paying these higher contributions, and that you don't see. Like when you look at your paycheck, it said here your actual salary was like, I don't know, $50,000, and except that you only took home $30,000 because we had to pay this much for your incredibly overpriced health insurance.
Yeah.
And so that's been happening. And so that's one of the things. So in terms of rent, LA is the superstar city. Everybody wants to live in LA. Who doesn't want to live in LA besides JJ?
Me.
Yeah, okay. I mean, now this may, the trend may reverse now, but so we had this trend where, back in the 1970s and 80s, cities were these like crime-ridden, smoggy, inconvenient, essentially hellholes where, when you said inner city when I was growing up, that meant poor people. Yeah. Usually poor black people. And that meant it was a place that you didn't want to have to live. You didn't want to have to live in the inner city. But now inner city is not even an expression anymore. And now like urban living, because that's where we basically took this absolute bullshit vision of the city, which was like Friends and girls and whatnot and Sex and the City. And we transformed that into the reality of cities by taking all the people with money, and they moved from the suburbs back to the cities. Right. Crime went way down. Pollution went way down. Cities became nice places to live, and everybody crowded in. And these tech industries and finance industries and these high value industries crowded into the cities, and everybody started moving from far and wide into the cities and pushing up rents there. But what you don't see is all the places where rent is like half of what it used to be because the whole place is a ghost town.
Right. Okay.
And so in the national statistics, those ghost towns get averaged in with New York City and LA and San Francisco.
I want to start bringing this sort of back to crypto a little bit.
Good idea.
This is important for people to understand about inflation and
super. And then, what I want to ask is then. So I know that a lot of wages have not changed, since like the '60s. I know that there's a lot of. Actually, there are certain jobs, at least in my industry, in the music industry, people are still getting paid the exact same amount. Why doesn't? And this might be a huge question, but trying to bring this back a little bit to crypto, why don't free markets actually work when it comes to increasing wages? Like why? Like I just don't understand why that isn't something that actually fixes that problem naturally.
You and everyone else want to know this question.
Yeah. Okay.
I'll go over briefly some of the hypotheses. Hypothesis number one. Technology is taking over everything, and the only people who are seeing wage increases are the people who are smart enough to work with computers. I'm not very favorable to this hypothesis, but it's a thing people said for a long time. Hypothesis, and also that's also the automation hypothesis, the idea that like normal people get automated out of a job, and only the AI engineers who program the robots actually get higher wages. Like AI engineers are making $500,000, $1 million a year now. Like that's what you get as an AI, like good AI engineer. You're getting like $500,000 a year or something.
That's crazy.
That's great. Like that's a nice fucking salary. And then like so there's that hypothesis, the technology hypothesis, and of course even Andrew Yang, he's a genuine man of the people. He doesn't want to tell people that they're useless crap and that you're too dumb to program AIs. But effectively, the automation hypothesis says that only a few people program the robots, and then the robots do all the things, and everyone else gets displaced. So that's hypothesis one. Hypothesis two is the legal institutional hypothesis, the idea that we used to have unions which would fight for people, like fight for regular people to like take a bigger share of the pie. Now unions got weak, and so the management and capitalists took a bigger share of the pie. Pretty simple there. Hypothesis three is concentration, the idea that we've had all these years and years of mega mergers, and these sort of quote unquote superstar companies like, Google or like, Tyson Chicken or something. Remember when there used to be a whole bunch of brands of chicken and now it's just Tyson Chicken? Like
yeah.
Yes.
Every industry, we've got like AT&T and Comcast. We've got like just a couple airlines. Remember when there used to be like Pan Am and TWA, probably too young for that, but
so
we remember that.
Is there another hypothesis, or is that pretty much it?
So concentration, automation, deunionization, and there's also globalization. Now your average worker is competing with someone in China, with a lot of someone's in China, or with I don't know, call centers in India or God knows what, garment workers in Bangladesh, furniture makers in Vietnam. So like this globalization competition. So globalization is the fourth big hypothesis.
Yeah. So the reason that I asked that question, I actually didn't expect you to go in depth that much, but thank you very much, Noah. There's this libertarian belief among crypto people that, the free markets are going to fix everything. And that starts with Bitcoin. So it's like, oh man, we've just got all these complicated systems that people don't realize have now it's 100 years of economics working this particular way. And a lot of people criticizing government and the US dollar, saying like it's broken, the like losing the gold standard was the end of the US dollar. We need to make money for the people. And part of what this podcast is about is like, I don't know, we're actually fans of government, because government is that's what you create for the people, by the people, so that not everyone has to deal with everything on their own, right? So it's
right.
Yeah.
Like I'm the government. I vote for my representative. My representative goes and does what I want them to do.
Right. So here's kind of, I guess,
in a working
question.
democracy.
And this is one of the things that you kind of mentioned in your article is, what are some different ways that crypto could evolve? How could it evolve to actually be better than the US dollar? Is there any, what are some of the problems that we'd like to fix that crypto might be able to address?
So if you were able to get something that works, that has the same basic functionality as the US dollar with fewer onerous rules and random fees, you could do it. So for example, so the first part of this is getting something that has the functionality of the US dollar. I can't just wave that away. That's really huge. And that's one reason why I think that matching the US dollar's 2% inflation target or thereabouts, maybe a little higher, 2.5, I don't know, that would be like really smart to do. But you also have to have this lending infrastructure where you can make loans in the cryptocurrency, and that's going to be hard to set up, because that's what you can do with dollars. You can borrow money and lend money. It's going to be really irritating having to like convert back and forth from dollars to do that with crypto. So lending infrastructure is important, but there's all these rules for like using US dollars, transferring money internationally. There's all these fees you have to pay, buying something because of stupid, credit card, swipe fee, monopoly, regulatory protection bullshit. Like you have to pay.
Wait. Like, don't just gloss over that. What is
I'm not
that?
gonna.
Like,
Yeah, no. So the swipe fee. So like when you like how the store says like, oh, credit card minimum $10.
Yeah.
Why the hell should that be
Right.
true? It's just as easy for a credit card to process a $2 payment as a $10 payment, right? But the thing is that the credit card charges like a fee per use, and these are often protected by regulations, as in you can have other companies come in and say, you can't have other companies come in and say, oh, we're going to charge you a fee of like, a much lower fee. So actually these laws are complicated, so I don't want to get this wrong. It actually is complicated. So the
So there's a
stores
lot of
can't tell
middlemen
you.
and
Yes, there's a lot of
regulation.
middlemen. They're protected by regulation. I could explain how that works.
Yeah.
Go listen to like Patrick Collison explain how
Okay.
this works. He
So it's
really
just
hates
overregulation. There are certain things that are
overregulation to protect incumbents,
overregulation.
to protect
So
to protect Visa and MasterCard.
to protect the companies that are already there. See, that's what seems fucked up to me is that there's middlemen that are protected by regulation. It's like,
Yes.
that kind of sets up a very, very inefficient system. And that's
It
one
fucking
thing that I'm
does.
like, man, crypto could actually become very efficient. A lot of people talk about how, Bitcoin and the use of electricity for miners is going to destroy the planet. It's like, well, actually, the US dollar system is probably pretty bad for the environment too when you think about everything that goes into it.
Well,
But
it's hard to say what's
yeah, it is
good and
very,
bad
I
for
mean,
the
of course
environment
it's
here.
hard to say, but it's one of those things that people don't realize that I mean, there's middlemen, there's fees, there's regulations to protect the businesses that are already there. Those businesses are lobbying the government. Those businesses are, I mean, that's a big problem.
Right. Yeah.
I mean, so like, let's say everybody switches over to, let's say, Nano. So you're not paying any fees.
No, let's use Digibyte.
No, because there's fees on Digibyte. Let's just like,
Oh God, so many things I don't know.
IOTA.
No,
We're
hold on.
using
You'll
IOTA.
understand what I'm saying. So, but then someone's
Okay.
going to say, hey, here's a machine that'll let you accept Nano, and I'm going to take 1%.
Fucking Nano.
Like, what's going to stop people from doing that? Like building out the infrastructure. People are going to still charge. I mean, because like, how else is Visa and MasterCard going to run their infrastructure? So Nano has a perfect problem right now where their perfect example is they don't have money. The developers don't have money. And so they have a developer fund, and it's going to run out, and people are going to have to somehow either donate money
Right.
to them, or all development's going to shut down. And so what
Here's
do?
the
You
answer.
can charge a fee.
Mhm.
Bitcoin Cash is
Right.
doing the same thing. Are we going to have
Mhm.
an inflation fee of 12.5% that goes straight to the devs? Like, these are important. Like, this is why I say
Super important.
Nano needs to be attacked. Digibyte needs to be attacked. All these things need to be attacked on a real world basis, because devs can't work for free.
Yep.
And once that developer fee runs out, or that developer fund runs out, how are these people going to pay their bills? How are they going to eat? So money has to come from somewhere. So I understand the thought process behind, oh, free sounds great. Nano sounds great because it's free. Well, in the real world, how realistic is that?
There's a difference between that and making sure that your administrators and developers can get paid. And there's a difference between that and then having it be your profit model for your business that could possibly be technically obsolete soon that you're trying to protect.
Sure, yeah. And if you wanted, if you want to do like a nonprofit version, or whatever, there's options. But at the end of the day, everything still costs money. Like these still, and if you're a developer and you're working for a nonprofit making like $50,000-$60,000, and you can turn around and go work for Google and make $1 million a year, like, are you going to do that? And then at what point do you start having subpar developers working on your currency because
Right.
you just can't afford to pay?
A 12.5% fee for transactions. That's anyone who charges that is headed to like the graveyard, because like that's so much higher than what Visa and MasterCard charge. Like that's just called
Bitcoin Cash was
technological
going to
inferiority.
every time they mined a block, 12.5% of that block was going to go to the dev pool.
Yeah.
Yeah,
And then the rest of it
Jesus
was going to
Christ,
go to
like
the miners.
But no, but that didn't come out as an addition. I mean, was that, how much of that was actually a fee that you paid transaction? None. It was just
They were
meant
going to the amount of Bitcoin Cash that gets mined per block, they were going to take 12.5% of that and divert that to a developer fund.
Right.
And the
so
rest
that's
would
a
go to
tax
the
on the
miners.
miners. That's not like That's not going
Right,
to
tax on the
increase.
miners.
That's not going to change the fee market necessarily. Well, I guess it could if
Absolutely, because the miners
yeah.
are making less now.
Yeah.
And so all of a sudden
Right.
you're
So
saying
who?
you know.
So if I want to pay you in Bitcoin, I'm sorry, what's this one?
Bitcoin Cash.
Oh, Bitcoin Cash. Bitcoin Cash. So if I want to pay you in Bitcoin Cash, I want to pay you like, I don't know, $1,000 for some really high quality drugs, and then I pay you the $1,000 or $1,000 worth of Bitcoin Cash, whatever. Then what? We just pay that, and then the miners mine it. And then where do the miners get their reward? I mean, if it's not inflationary, if the number of Bitcoin Cash coins, whatever, is constant, how do the miners get compensated? Where does that come from?
Fees.
Right. That you're right. You're talking that's the
Fees
fees
from
and
who?
that eventually
Who pays the fee?
You.
Well, that's the
You and
transaction
Me.
fees.
The
Okay, me.
transaction
That's
fees,
right.
Yeah.
No,
That's
so
called.
what you're,
That'll never fly.
yeah. So
Goodbye.
what you're saying is that creates a negative feedback loop essentially, where
Oh,
it's
yeah.
eventually not going to work.
Yeah, no
Right.
one's
So
going to
there's
12.5% transaction fee. Imagine having to
Well,
pay
no.
12
No.
That's
So
like a-
Not
no.
12.
So once it's all mined and there's no more currency to
No
mine,
more.
then it's
Exactly.
supposed to sustain itself off of fees for the the fee is going to be strong enough where like their idea is
Exactly.
by the time that happens, it's going to be like one Bitcoin Cash will be worth or one
Yeah.
Bitcoin will be worth like $1 million, and so a small transactional fee won't matter to the user, but it is going to matter to the user because
Of course it's gonna matter to the
everything
user
is gonna
because-
happen.
Yeah.
A pizza's still a
I've-
pizza. You don't want to have to pay 12.5% of a pizza to buy a damn pizza.
Yeah. Well, it wouldn't be
never-
12.5.
yeah.
That's
No
only
matter-
when you're actually mining. When you're
Right, it
actually
doesn't-
when there's stuff left to mine.
That's got to come from somewhere.
That's not going to happen
Exactly.
during.
And so-
it's not going to be 12.5% during transactions. It's only when you're mining and in block rewards. So
It's-
miners are
Okay.
different than the people using it as a
But it
transaction.
doesn't matter.
But ultimately,
That's got to
that
be
has to
worked
filter
into the
through.
market. Yeah, that's got to be worked into the market somehow, and it's probably not going to be the way we think. This idea that okay, once we've mined every Bitcoin and like there's no more reward for mining blocks.
Right.
Don't worry, Bitcoin's going to be worth enough that the transaction fees are going to be enough to satisfy the miners. I've never bought
Which
that
means
idea.
that we're paying that because the
I-
costs
I've
are going to go
never-
down to mine.
Yeah.
The costs are going to increase to mine.
And I've never even done that much math. I've just kind of thought, how is that going to be fucking possible? Because the value of Bitcoin is going to go way up.
I think their
Anyway.
logic is that if every single person is using it in the world as a reserve as a currency, and you've got a billion transactions a day around the world, that a small fee would go to cover that. But I just don't see that happening. I mean, like,
All right, I've got
first
one
off, it
more.
takes 10 minutes for a transaction,
Yeah.
let alone like.
I've got one more kind of question, and it actually has to do with Nano a little bit. Noah, Nano is a cryptocurrency that comes up a lot on this show. It's one of Michael's favorite because it's there are no fees for transactions. It's completely free and it's really fast. It's a very small team and it's probably pretty centralized at this point, but it could
It's
grow.
completely it's super decentralized.
It's super
itself.
decentralized. Okay.
But the team is so small that's a danger.
Right. The team is small, so they can make a lot of decisions. They don't have to follow big consensus, systems or whatever. So one of the questions, one of the problems is that in order for something to be adopted, you need incentives for people to use it, right? If there are no fees, then there's no incentive for people to to run nodes, which would keep the network working. Like, the reason that Bitcoin is going up in value is because everyone thinks they're going to get rich from it. So and the miners can get paid from their rewards, or they can get paid by transactions. There's all these incentives to do it. Like, what about the cryptocurrencies or just the systems that work very efficiently but have no incentives? The only thing that we can think of on this show so far is that the users, the businesses, would be incentivized to use it or to host their own nodes because it makes it easier for their customers or their secondary users.
And also safer for them. Safer for the business.
Yeah. So Michael, you know what I'm talking about, right? You
Yeah.
you understand this question. well, this is a problem in crypto. You either have these cryptocurrencies that are really great, but there's no incentive to adopt them, or they're fraught with fees and they're very slow, but there's reasons to actually use to own them. And I'm trying to figure out like how we can get the most efficient cryptos to actually become adopted. I just don't. It's like a real problem.
You need super low fee. You need super low fees. But see, that's the thing. So the research that I was explaining in my column was basically saying like, keep the inflation going forever. Keep the rewards, the new Bitcoin creation or the new crypto creation rewards going forever. Never stop that. Never have a cap, right? Just keep that going forever. And then you can have something like a 2% inflation target, and that can be your reward forever.
I mean, that's essentially what Ethereum does.
Yeah, that's what Ethereum does. And I guess there's other problems too, because in order to be able to make decisions about what your cryptocurrency is doing, you need to have a consensus that works very quickly. And that's a big problem in crypto. It's really, and it's probably the main problem that causes so many forks in Bitcoin is you get scaling debates. How do we get Bitcoin to scale? Well, we all disagree. So we're going to create a new Bitcoin, and we can't actually, the consensus is going to take, who knows how long it's going to take to actually become adopted. And that's one of the most fascinating things about crypto, actually. Like when we talk about Nano, the development team is very small, so they can make decisions very quickly, which is both a good and bad thing. But I don't know. With the U.S. dollar, you've got a government that is basically calling the shots, right? Is changing interest rates? Is that something that? I mean, do you have to pass new laws? Do you have to create bills that become laws in order to change interest rates, or who makes those decisions?
So the Fed does. So the Federal Open Market Committee decides what interest rate to set.
I see.
Essentially, the chairman of the Fed is effectively a dictator, but then, he gets advice from lots of these other people.
Yeah, that seems like a very powerful position. Somebody who would need to be extremely responsible and not have any sort of personal interest, I guess, in what they're doing.
It would be helpful if they've been poor at some point in their life and can understand what's going on with 99% totally. Of Americans. Like, I love Janet Yellen, but when she was just completely blind about what was going on with the housing market and renting, and she just didn't understand, and people were trying to talk to her about it, and she was just like kind of boneheaded about it. And this was Obama's appointee to the Fed. Any thoughts, Noah?
Yeah. So, well, no, I don't actually remember what you're talking about. I mean, I don't remember the situation. I thought that she did a good job.
So she was getting people were actually picketing anytime she was coming to their areas. They would get out in line and just picket because she wasn't. She was kind of turning a blind eye. This was like 5-6 years ago, right when the housing crisis was really starting to hit renters hard. She was just kind of like, "Oh, I know, I'll keep it under advisement, but I just don't see it being an issue." And then now most major cities are anywhere from 40 to 60%.
Okay, suppose she had raised interest rates and a bunch of people had gotten thrown out of work, right? How you think that would have helped?
I mean, so we had this debate. So Noah and I had this really long debate yesterday with 1,000 people putting in their viewpoints about fracking.
It was fun.
And this has nothing to do with crypto, right?
It all kind of comes back because here's the thing: is crypto people
JJ
need
wants to keep on
understand economics.
I don't mind getting away from crypto. Maybe we should end the podcast having something to do with Bitcoin or whatever. But anyway, go on.
We'll swing it back. So we were talking about fracking, and Noah's like, well, so we're just shut down fracking and have all these people be out of work. It's like, well, yeah, because actually there's more work in solar panel construction, wind power, or wind turbine construction.
You're actually right about that part. You're right.
So this idea of
correct.
well, yeah,
that's not the problem with shutting down fracking.
Let's push out bad money. Now, the problem with shutting down bad money.
The problem with shutting down fracking is we built all these natural gas plants, and we don't yet have solar plants built. So if you shut down the fracking and all the natural gas plants go dark, where do you get the energy to build your new solar plants? The solar plants don't just appear.
That's kind of like a hyperbolic claim.
The
'Cause
reason
no one's
solar costs are so
saying-
low.
No one's saying
The reason
shut
solar
down
costs are so
fracking
low.
right now.
You
Like-
guys might
Well, they
need to
are,
take this
though.
back
They
to
are.
Twitter or something.
No, you're right. You're right. Okay,
Like-
so but back to the point.
Yes,
Janet
back to the
Yellen
point.
raising interest rates and throwing a bunch of people out of work in order to try to stem the rent crisis would have been a bad idea.
Well, no, because
Throwing
I'm not
people out of
saying
work
I'm not saying
as a solution
raise
to high
rents.
Is bad.
No, but I'm not saying raise rents. I'm saying if you
You raise
if
rates,
you,
you mean?
if you raise rates on housing. So people
How do you-
don't. So people.
how does
So
Janet
instead
Yellen
of
do
people
that?
buying, I don't know.
How?
You tell me.
Mm.
Well, no. Okay, so
No,
you
I'm
can
saying
raise
you tell
interest rates
me.
on bonds. No, they can't do
Right.
that. They cannot specifically raise. You can. Yeah, you can't.
You can't raise.
Like
you can't raise mortgage rates,
You can raise all interest rates at once.
but you can't do targeted rates.
You can't do.
Is that
You
what you're
can't.
saying?
I mean, you can't do targeted stuff. Not very easily. I mean, you can actually lower if you do quantitative easing. You can actually lower mortgage rates. If you
What
want.
is quantitative easing?
Quantitative easing is when you normally you buy, you know how you buy treasury bonds or treasury bills or whatever, government bonds if you want to change interest rates. Instead, quantitative easing says instead you buy other stuff. You buy like housing backed bonds and like, you can even do stocks. You can buy stocks.
Why do when some people hear quantitative easing, they think money printing?
Yeah, well, it sort of is, because what you're doing is you are actually creating new monetary base. You're creating new reserve accounts in exchange for assets, and so you could do that with housing, but it's not going to help. It's not going to do anything. Making it harder for people to buy mortgages in like LA, you can't do that. The Fed doesn't have the power to specifically say, all right, people stop moving to LA, stop getting mortgages in LA, stop buying houses in LA. No.
No. So like Canada had a thing for a while where like they were charging, some ridiculous rate on a 30-year mortgage or something like that. And so, only people who were, solidly middle class or whatever were actually buying homes. People were renting. Rents were really, really low. Like my friend, 15 years ago was renting a penthouse apartment in Montreal for $400 a month. Like she was like the rate, and then she goes, then I moved to New York and it's like 15 times higher than it was in Montreal.
Yeah.
So, and these are two major cities in two successful developed nations. So my thing is like, what can you do to actually stop people from, because people are going to do this with crypto. As soon as crypto becomes the next big thing, like they're going to do this with the crypto. How do we stop them from buying 10 houses because that's a safer investment for their money instead of just one, and then rent seeking? Because rent seeking is a huge thing in the crypto space. People are really tired of rent seekers. So how do we stop people from rent seeking?
As are we all.
Putting their money
what
and buy
is a
10
rent seeker?
properties.
What does a rent seeker in crypto look like?
I'm not even 100% sure, but I know people are really worried about it. And I think
So
I think
people
people
are worried
about it with like hoarding Bitcoin and then kind of like I'm honestly I'm not even 100% sure.
I thought that's what crypto was all about, was trying to get your hands on as much of it as possible, and then you have all the power.
That's
I don't know.
That's I mean, they don't
Rent
say that out
that's
loud.
rent seeking.
That's rent seeking, right?
Yeah. So I mean that they don't say
All
it out
right.
loud. Well, this is kind of like what conservatives kind of tend to do is say they're against something and then secretly do it in the background.
Yeah, totally. That's what the Bitcoin maxis do too.
So come on, Noah, fix this problem in 14 seconds. Go.
I don't know.
So
Maybe Bernie. Maybe President Bernie will do it. Maybe he can fix it.
The moral
He's
of the
gonna
story
smash.
is the moral of this podcast is money is really complicated. Computers are really complicated. Don't try to understand any of it. And
By listening to crypto Twitter people.
Or just don't
and
bet all
then-
your life savings on trying to understand it. All right.
yeah. And instead, just trust. You should just trust. Don't verify. Just trust. That's one of our. I mean, it's amazing.
Tone
how much
Vase.
trust
Listen to
goes into
Tone
the
Vase.
system.
And
Well,
the
I mean,
person,
you know,
you trust should be whoever yells loudest on Twitter.
You've heard
who
this,
should trust.
verify, don't trust. You should do your own due diligence. You should be doing all your research. And it's such a full of crap statement because nobody can possibly do that. Nobody can possibly understand everything about these systems. And that's why we put so much faith into an elected few who can make decisions
Yeah.
about something like the Fed.
The
And
whole
it's like,
so Bitcoin coders are essentially the U.S. government.
yeah, there are new
And people
the
running
crypto
nodes
government.
are choosing the people that the developers that they like and confirming their code and saying yes to this code, and we're going to all follow this chain. It literally just is a perfect mirror of the U.S. government. We're picking somebody, and
Congratulations,
that person
guys.
makes decisions.
Yeah, congratulations.
Congratulations,
So,
you reinvented the government.
Noah, so you wrote that great article on Bloomberg today. Thank you so much. Do you have any questions for us, since we actually live and breathe the crypto space and we know what's going on with it? Do you have any questions about how it works on a cultural level or anything?
It is interesting because I kind of do. Well, I'm not. I don't have
You
well
don't have to.
formulated.
You don't have to.
I mean, I want to know like how crypto people try to find new crypto enthusiasts, like people who aren't already in the crypto space, and whether they're getting worse at doing that than before, and now just sort of trying to like cannibalize existing crypto investors to like push up one coin at the expense of another.
Yeah, there is a lot of that. There used to be more of a concerted effort to try to get new users into crypto. And I think maybe just because we went through a long, slow bear market that made it very difficult to do that. But yeah, no, it's a problem. I at least notice it, or at least our echo chambers get smaller and smaller. And so it's hard to find the people who are going out of their way to find new crypto enthusiasts.
I mean, so here's the thing: is we have to stop saying people can use crypto, because trying to convince somebody to sell their US dollars for Nano and try to find a place that actually accepts Nano or Bitcoin or Digibytes or Ethereum or anything is just unrealistic and a waste of time. They're not going to do that. But if you say you can make a lot of money on this if you invest in it, and here's an investment space where it's easy to put your money in and it'll lock it up for you and treat it like a 401k.
All that, yeah.
People are going to, and then we have to hit new all-time highs, because once you hit new all-time highs, then MSNBC is talking about it, and CNN Money and Fox News Money and all these different ones start talking about it again. And people want to make money. People jump on Apple when it's at all-time highs. People jump in Google and Tesla when it's at all-time highs.
Right.
Like that's just how it is, And so back at the 2017 top, 2018 top, the cryptocurrency market cap was about 800 billion.
Yeah, it was almost
800 billion.
So
what's it now?
And now it's 300 billion. So it's still significant. Like 60% down, 70% down, 60% down. So,
but Bitcoin is
even at the latest
50%
bull
down?
run, Bitcoin is now about 50% down.
Yeah.
So
those are some great ways that we can see adoption. The question about, do people in crypto, is there still this effort to convert new users? I feel personally like there used to be more appreciation for that. Like if you went on Twitter and said, "Hey, I convinced my family to all buy Bitcoin today," you would have gotten a lot of likes and a lot of cheers. And I don't know if I feel that right now. Do you, Michael? I don't quite get that.
Nobody even talks about that.
No,
I see like
if you were to do that,
like once a week, I see somebody do that.
Yeah,
now.
you might even get shit for that. It's like there is like this sort of Bitcoin is an exclusive club. That's what I feel like the maximalists are trying to create, is this, and that just doesn't work for adoption.
And I think this is my problem with Nano, is like Bitcoin is now this institution and banks are investing it and doing all this, and Nano's over here saying no, we want to make it a currency. And I'm like, but nobody wants a currency. People want an investment tool. They want to store value. And so you're off on this different path that no one's really asking for. And that's my worry about this better tech. And that's why I make that Tesla versus the AC/DC war. And
Tesla versus
Edison. So Tesla had the better tech, but Edison had the better pitch. And everybody went to Tesla or Edison.
Right.
Yeah. And so it's like, so that's my worry, is like, these people, the better tech isn't necessarily going to win out, because at this point, I'm just worried that at this point, it's just like people just want, they see Bitcoin, they see that banks are going to be storing it now and putting in like Roth IRA, not Roth IRAs yet, but like IRAs and stuff like that. And they're like, why would I take a chance on this technically better technology when I can secure my funds with a bank that I
There's
trust?
also just like a war going on over what is the better tech. I mean, you are crazy about this shitcoin Nano, and you are convinced that it is better tech. You mention it on every single show, which is good.
I say I want it to be attacked to know if it actually is better.
Yes, but we mention it on every single show. And the thing is there's 1,000 cryptocurrencies that people believe is a better tech. So we've got to have that conversation.
Yeah.
And like, yeah, I mean, that's something that we got to talk about. Noah, in your article, you actually said maybe it will be some other cryptocurrency. You're like, I think those were you guys said words basically like that.
A shitcoin may not be so shit.
Oh yeah, totally.
It might be a
Yeah.
Hitcoin.
Yeah.
So we need to Hitcoin. I don't know if there is a Hitcoin. There must be.
Yeah.
All right. I guess we should probably wrap it up. That's an hour and 10 minutes. Thank you again, Noah, for joining us. This is the third or maybe fourth episode that you've been. I'm running out of
ideas, but I can spout off about economics anytime.
Oh, well, I mean, we can always talk about science fiction or something like that too.
Oh, hell yeah.
Yeah.
I have bad news though. Yeah.
Well, what's the bad news? You got to tell us.
I forgot to do the local recording.
Well, hopefully the Zencaster thing works. Oh, right, because we started without saying we're starting now.
Yes, exactly.
Okay. We didn't do the clap. That's right.
Oh, yeah.
We didn't do the clap.
Shit.
We got to get back to the clapping because that was such a festive way to start the show.
Yeah. Damn it.
Oops, sorry.
Well, we can. Well, I guess it doesn't make sense to do it right now.
Yeah. Well, you and me should clap at least.
The next time, I mean, there's so many things. I mean, there's so many aspects of crypto that I actually love. One of the big, and I don't want to get into it right now, but something that maybe we can talk about in the future is you mentioned how artificial intelligence is a labor market that's exploding right now, and there's actually there's crypto application for that. You know, being able to distribute code or Internet of Things, and how cryptocurrency is going to play a role in that. So it'd be cool to talk to you about some of that in the future.
Oh yeah, that'd be great. All right, shall we wrap it up?
Yes. Everyone, thank you for joining us.
Thank you.
Great.
Thanks,
Talk to you guys.
When we kiss, putting on